Morning, everyone. Let me know if you can hear me. Before we get this thing started, so we're not over here, like I said before, yapping and nothing happens at all. Just drop a comment, please. Please. Morning, perfect. Thank you for checking in. One of my programs just got closed here. I don't know where it is, but I was looking for some of this news because we got some news. I'm looking at it on my phone right now. We got some news that presented this pop. I'm going to be talking about what we got going on here. Tech continues to sell. Yesterday we had Meta earnings that originally popped, right? We were trading in the 310s, 3 teens, and then overnight, right, you can see on my screen we're down at 290, right, trying to pull back up. So tech, nasty continuation to the downside here, right? Big tech is starting to break down. Semis are starting to break down. Tesla down. Netflix, the only thing that's up with Microsoft. They're holding hands at those highs. Google down. Meta down. And Amazon today has earnings. It's down. So traders, we're judging tech earnings season as a mixed bag of results, realistically setting shares of each company in opposite directions after they report quarterly results. So one more tech giant, Amazon, is set to report today after the bell, and then next week we have Apple, right? So markets, they're still kind of mulling around, getting pressed a little lower, as you can see. Overnight, we did drop pretty significantly. We're still below yesterday's lows, despite this most recent rally here pre-market that we were trying to pick up frickin' all night. I've barely slept. Facebook weighing in on tech shares realistically in the broader market. The triple Qs and NASDAQ weighing on the down move. Meta Platforms, as it's now called, initially rose 4% in the after hours trading yesterday on Wednesday, with strong revenues, profit, and users all topping the forecast. But the sentiment didn't last long before this massive reversal. Right now, we're down a few percent, right? It's down about 9 points pre-market here, 8.5, whatever. Anyways, whew. There were several references to great uncertainty and volatility, especially with regard to the advertising and market that still represents most of the company's revenue. Doubts over the macro landscape also led Meta to hold off on the 2024 revenue outlook, which, when you kind of stifle or don't talk about forward guidance, not the best of signs realistically. So, doubts over the macro landscape with that hold off on that 2024 revenue, while its capex plans for the coming year increased meaningfully, as well as costs associated with infrastructure, payroll expenses, and AR/VR investments, as its further scaling into the metaverse continues. So, the CFO Suzanne Lee talked about this a little yesterday. We recognize that we have very ambitious investments on the horizon, including over a long time horizon with our Reality Labs work and newer, equally ambitious investments we've added to the Gen AI roadmap most recently. So, and we recognize that we have to earn the ability to invest in all of those things by delivering consolidated operating income growth over time. So that's something very much focused on. This is what she said, right? The AR/VR division in Meta posted an operation loss of $3.7 billion in the last quarter and lost $11.5 billion this year alone. That's a pretty significant hit. The one thing that you do have to know about Facebook Meta, call it what you will, it's obviously up 150% off of its year-to-date rally, but at the same time, this is a cash cow. The money that this thing has, especially at those low valuations under $100, right? Impeccable cash, and they can do a lot with it. So that's something to watch for. I think that big tech here with Amazon and Apple, maybe there's a little more downside to actually capitulate people. I want people to start buying so many puts into this low that they get flushed, right? That put to call ratio isn't very high. The capitulation in this market is not necessarily there, right? If I'm looking for a reversal, which is something I'm looking at, we need to rug pull tech a little more aggressively, and we need to capitulate in this selling. Right, so keep that in mind. If you take a look at like Microsoft or any of these other names, yeah, Microsoft, okay, it gapped up over the last earnings session, right? And right now it's not really selling. Apple is another one that's just been sustaining its gains impeccably, right? 171, it's barely moved. It's just below yesterday's lows. It hasn't really done much. Google, on the other hand, is one of the big tech names, right? Massive market cap that's been dragging this thing down. It's down from the 140 area. We were very close to all-time highs, actually. Right, and of course, I'm not a financial advisor. This is investment advice, but I do like this for the long term. Right, I think these shares are solid additions here. You can see all-time highs. I don't know exactly where it is, but the most recent top was about 6% lower than the all-time high. Right, so that's almost nothing. Right, from the earnings report all the way down until today's pre-market, we're down about 12% or so on Google. Right. And it's weighing down on tech, right? Tech, it was the final thing to turn and capitulate realistically, because the thing is, we're up like 40% in the overall tech market here, pre-market, right? These are the earnings reports that I had mapped out. Year to date, we're up like 40%. This thing's barely pulled back. I'm looking for that capitulative sell that'll get us into that 340, 345 on the triple Qs before we could start to see any meaningful buy progress, right? We haven't even gotten to massive negative standard deviations. So as I look at this, right, I'm not necessarily like super convinced that everything's turning, but at the same time, I wouldn't necessarily be super bearish into these lows. I feel like it's late to have bought puts. The last time I added puts, I think, was on Tuesday. I think it's a little late to be into those long puts, but I think it might be a little early to be in those long calls. So we're in a limbo state. Everyone's waiting for that capitulation. We could see markets pop and drop into the end of the week. That's kind of what I'm looking for. We'll see how that does play out as we talk about some of these important levels on the S&P 500 here today on the futures. But this morning we had U.S. GDP quarter over quarter, the advanced reading. The expectations were 4.5%. The prior was 2.1%. It came out at 4.9%, a pretty drastic beat in that, right? Even with this higher for longer narrative and interest rates, what we've seen with the GDP is consistent economic growth as this tight labor market is really weighing in on a lot of this economic perspective, right? Under the hood, there's a mixed batch of everything, right? You obviously have yields, you have bonds in turmoil, right? The bond market has gone to straight shit. But then you have a pretty strong economy that could apparently sustain this and sustain 2 wars, apparently, according to Janet Yellen, right? So U.S. durable goods came out as well, 4.7 versus 1.8%, massive, massive beat. The U.S. GDP price index, 3.5% versus 2.7%, huge beat. U.S. core durable goods, 0.5% versus 0.2%. Pretty big beat. U.S. core PC price advance, right? 2.4% versus 2.5% prior, 3.7%. The lower the better, right? That's an inflation gauge the Fed does look at. So a lot of bullish news comes out here this morning. And we got this fairly significant 25 point rally in the S&P 500 futures. So these are my levels, right? I was looking to see if we could hold 41.88 on the overnight session. It bounced just a smidge, right? 8-9 points from that area. We have these blue levels here, very strong support, which is a distribution top at 41.70s, right? Low 70s, high 60s, which is where we bounced off, and also where a lot of people got aggressively long into those lows, right? Super long into those lows. I like how that panned out for that push, and we're now above that low 90. But we're below 42.05. So obviously I'm treading very carefully considering how this market's been shaping up. There's a massive resistance between 42.05 and 42.10, right? I think that it's not going to be the easiest rally to continue for these buyers. But anything above that, I think that we could actually get that turning point day today where we bid a little before they probably look to sell it. Sellers are still pretty happy with prices here between 42.05 and 10ish. I wouldn't be super bullish about this, right? We're kind of in a limbo where some buyers might want to step into that 41.90, but anything under that, realistically, this sell side continues. Could be one of those days where we pop a bit and then everyone gets super excited, starts buying calls and gets super long in the market, and then we start dumping, tech gets absolutely obliterated. So I'd be very cautious looking for something like that, kind of a pop and drop scenario, right? I've outlined my levels. I want to be diligent today as we were yesterday and the day before. with the areas that we have and the confirmation tools that we have in front of us. So with that being said, what I'm going to do is open up our live trading room today. Check us out at TradeProAcademy.com or community.TradeProAcademy.com for our free Discord there, community.TradeProAcademy.com. Yesterday we finished up a lesson on volume profiles for our team, and we're moving into market profiles today and adding more to our arsenal. So I'll see you guys in there. Let's see what we got. Happy Thursday, October 26th, and let's do this again tomorrow to wrap up the week.